Welcome to The Economy Magazine at I-24 News, where we provide a daily view on the world markets and the global economy. I'm Natalie Ehrlich. Well, Happy New Year, everyone. We have a special show for you today. In the coming decade, wealthy nations are expected to account for their largest share of global growth. It used to be that the economic muscle of emerging markets fueled the world's economy, but now the top economies will be ever more important. And with that in mind, as we celebrate the arrival of 2016, we've decided to focus on the globe's top two economies, China and the United States, and the economic challenges that they both face going into the new year. On to the program. Well, earlier in the year, back in August, fears of an economic crash in China gripped the global markets. The U.S. Federal Reserve even opted to postpone its much-anticipated rate hike, ultimately choosing to raise rates in December instead of September. Daniel Roth sums up the details.
One of the biggest economic stories of the year has been the so-called slowdown in China. In the middle of August, fears of a crash in China and its subsequent effect on the rest of the world hit the stock market hard, with the Dow Jones seeing an 11% drop over 15 days. But there are those who think that the worries are overblown, some suggesting that the GDP growth numbers presented by the government are inflated by a percentage point or two, and that, either way, a slowdown from numbers like 7.4% annual growth in 2014 and 7.7% the year before is actually a good sign.
Many of us would like to see much lower growth numbers. We would actually applaud if growth numbers were much lower, because that indicates that China is rebalancing more quickly, and it also indicates that the leadership is very confident about its ability to implement the reforms.
Meanwhile, according to the Center for Economics and Business Research, the next decade and a half will see a major shift in economic power, with China becoming the largest economy on Earth, moving up from its current number 2 spot behind the U.S. But part of the climb to economic power has come at an environmental cost. China is considered to be the world's #1 carbon producer, and because it is classified as a developing nation under international rules from 1992, it rarely has to give reports on its polluting. But some hope that the major COP21 summit earlier this month in Paris would give China a chance to change its tune.
I think the COP21 is actually making China government to ask these highly polluting manufacturers to shut down, at least for now, because of the meeting is going on, and also to help some pollution problem in China.
As China eyes long-term growth and increased influence around the world, it will have to contend with the reality that at points during 2015, the country was covered in smog, with dangerous particles reaching 50 times the World Health Organization's maximum.
After a difficult year for China, many observers of the world's #2 economy are suggesting that two different versions of China may emerge in 2016. The pessimists suggest that China is on the verge of a seismic instability due to an inability now to get a handle on major social and economic hurdles. The optimists, meanwhile, say that China will succeed in managing these hurdles and remain relatively stable by implementing much-needed reforms. So what China will we see in 2016? Here to discuss, we are joined by Sam Chester of Clarity Capital, as well as Aurora Carlson, our crowd head of the Asia desk. Thank you both very much for being with us.
Thank you.
So where do you see China going in 2016?
2016 has a lot in store for China. I mean, I think in terms of the economics, we'll definitely see slowed growth rates. I think the big question people are asking is China going to fall or succeed? And with China, it's always a combination, but it will succeed. Most countries would be happy with a growth rate hovering around 6 or 7%. We'll see some issues with the currency, issue of currency devaluation. I know the Chinese are planning to ask for the currency to be part of the IMF basket, which will raise some alarm with regards to its devaluation. And I think also given the current social unrest and issues with environmental problems, pollution, that could also raise some pretty significant issues.
Well, what about you, Sam?
I would really point to two issues. Just before I do so, one of the people who've taught me first China, Dr. David Lampton, he's one of the preeminent scholars in the US, he used to tell us that no leaders face a challenge as much as Chinese leaders, who have to go to bed every single night figuring out how to deal with the challenges of a 1 billion person society. So the challenges that the people in Beijing and throughout China are facing, those with the responsibility, are immense in ways that we really can't imagine. The two things I would point to, first, I would say a lot of people are now pointing to China and they're looking back to Japan in the 1980s. Let's remember, in Japan in the 1980s had double-digit growth for almost a decade. And it had then a real estate bubble and a stock market bubble, very, very similar to what you're seeing over China in the last decade. And of course, in 2015, you had both a real estate bubble averted in China and a stock market bubble that was not averted. So there are some dangers there. There's a lot of similarities between China and Japan. That's going to be very key to watch in 2016. Secondly, what's happening in 2016 for China's two closest sort of competitors and allies, Taiwan and the US, both are facing presidential elections. Both are going to elect people who are going to take a much tougher stance on China. Fair or not, the Obama administration has been seen over the last 8 years in China as someone they can sort of push around and have their way, particularly in Asia. And the same is true in Taiwan. That is going to change in 2016.
Interesting point here. Will China still, though, be a hot spot for investors?
I mean, I think absolutely. Just given my work at our crowd, we've been finding absolute success rates in terms of the Chinese interest and dollars flowing through our platform. But that's in the field of alternative investments. We're also still seeing high investments in traditional industries, in real estate, in infrastructure, both in Israel and all over the world.
Is that the nature because they have so many people, such a large consumer base, or something else?
Go ahead.
I would jump in. I would say I agree with Aurora. I think that the key here is that China is going to remain attractive for investors, but the old China of manufacturing, that's going to slowly recede to the past. Indeed, in 2015, we saw that services and consumption actually became a larger contributor to Chinese GDP than industry. So for Westerners and others around the world looking to invest in China, the China of manufacturing is less and less attractive. But as Aurora pointed out, the China of services, of consumption, of new industries such as drones, that's really where investors globally are going to be looking at in China. And just on the stock market, which we mentioned briefly and is always of interest, people were in great alarm over the Chinese stock market this summer when it became a bubble and then it collapsed. But to be very clear, the Shanghai index, China's leading stock market, it provided 12% year-end positive growth for investors. The S&P 500 in New York, that provided about 0.2, so negative. So as far as investors are concerned, there still is a lot of positive growth to be seen in China.
Interesting point there. But let's look at the stories of 2015. Will they continue to dominate the headlines in 2016 when it comes to China?
Absolutely. So as I mentioned before, I think pollution will still be definitely up there. Unfortunately, the situation, as we know on a daily basis, isn't necessarily good in terms of the air that we breathe. But China's planning to do a lot in 2016 vis-a-vis those problems. I know they're planning to shut down about 1,000 coal plants, which is incredible. I don't see any other country kind of doing that to address its pollution problems. But the other kind of story that has been gaining traction this year that we'll see a lot more of is really related to the internet space. China is investing on a government level far more than any other country in its internet promotion programs. Almost this year, it'll be in 2016. It's planned on being almost $200 billion in amping up its 4G and broadband wireless programs around the country, which is something to be noted.
Interesting. Well, that wraps up our segment for now, but thank you very much for joining us. And of course, we will talk about China in the new year. Moving on now, in the next year, America's economy is projected to expand 2.5%, with at least 2 million new jobs added to the labor market. Let's look.
2015 has been a big year for the United States. After months of speculation on when Federal Reserve Chair Janet Yellen would raise interest rates above the near zero they had been at for almost a decade, the move was made earlier this month. The Fed's key interest rate edged up slightly to between 0.25% and 0.5%, a sign that the Fed sees the U.S. economy as stabilizing.
Economic activity will continue to expand at a moderate pace, and labor market indicators will continue to strengthen.
But Yellen was careful to temper the mood.
I think it's important not to overblow the significance of this first move. It's only 25 basis points. Monetary policy remains accommodative.
Still, there are worrying numbers on the ground. The number of people living in poverty was nearly 47 million last year, 2.3% more people than in 2007, just before the crash, according to the U.S. Census Bureau. And some say there are weak enough numbers to worry about the recent rate hike and future hikes in 2016.
Even though the official unemployment rate is 5%, you have the economy's down about 3 million jobs from where it should be if you count all the people who have dropped out of the labor force or are working part-time involuntarily. So we still have a very weak labor market, weak wage growth.
Meanwhile, the U.S. has been upping its fossil fuel production in recent years, which is a major contributor to the global glut that has pushed oil prices down by around 35% over the course of 2015. But prices have continued to drop, and the Energy Information Administration is predicting that U.S. crude production will also drop in the first half of 2016.
For further insight now, we have our own Daniel Roth, as well as Joseph Grincorn, Wall Street investment expert and chairman of the Morris Group, which is based in New York. Thank you both very much for being with us.
Thank you for having us.
Well, tell us, what do you expect for the U.S. economy and the markets in the new year?
Well, I'm looking forward to a very, very good market in the U.S., of course. It was a very, very good year until, of course, China happened, et cetera, et cetera. But in the overall outlook, I see the U.S. being the best place for investors in 2016.
All right. Well, let's also talk about the Fed tightening policy. What can we expect for the markets going forward?
Look, I think what we're seeing now is actually it's not the Fed tightening policy, the interest rate hike that we just saw. It's not actually going to answer any questions. It's going to be affected by how the markets looked, and I think that what we're seeing actually is that Janet Yellen is telling us that the economy is not actually that strong. Markets are better than they've been in the last few years, but the actual fundamental numbers are not very good. Unemployment is down, but actually less people are looking for jobs. Wage growth is down. It's not growing really. Fundamentals are really not there, so we're not going to see a lot of hiking next year. I think this hike was maybe one special case right now.
Interesting. Well, what do you think, Joseph?
Well, it's funny. Many analysts are calling for many, many different rate hikes in 2016. I definitely agree. I think it's maybe at best one rate hike. The U.S. is very stable right now. I personally think it's strong and stable. However, the rest of the global outlook is very, very weak. I mean, everyone is really revising GDP much lower. So as Janet Yellen said, data dependent. I think the data, for the global economies is not going to be too good this year.
Right, and what impact will these rate hikes have on the global economy?
Well, if she decides to hike too quickly, then you're talking about a possible recession. Because then it really affects the credit and debit market, of course. And there's over $9 trillion in corporate debt out there. And if rates get hiked too quickly, you're talking about payment shock. And the last thing you want to do is all the years that she spent building up the economy is taking it backwards. So I think, rates are going to stay low for hopefully the next year or so, definitely.
Well, another big topic here facing the markets is oil, with some producers like Russia, Norway, and even Brazil pumping more oil in 2015 than analysts had forecasted here. So what impact will that have, all this oil in the marketplace, have in the coming year? Will we continue to see the prices go down, or will it actually go up?
I think the prices are going to keep going down. I think we're seeing a game of chicken occur primarily between the United States and OPEC countries. The other countries are also being affected, other oil producers certainly being affected, but the two key players in this are the U.S., which is continuing by and large to produce, though their production has dropped as prices have dropped below $50 a barrel. But really, I think that the U.S. and the OPEC countries don't think they're not ready to give up on this game of chicken. Nobody's pulling back right now on their production, so prices are going to keep going down. The one benefit of this, two benefits, is one, it's cheaper for consumers, and two, maybe there'll be more interest in alternative fuel sources as the price of oil goes down.
And Joseph, what does that mean for the financial markets in 2016?
I think what happens, overall it's very, very good for the markets. I think the problem is that oil has not found the floor yet. So every little piece of information really spikes it higher or lower. It's very, very sensitive right now. I think after oil finds a floor, I think somewhere around $30 a barrel, I think it's going to be very good for the economy and very, very good for markets in the future.
Do you see any bright spots? for investors?
I think it's going to be very good for consolidation and possible M&A in the coming year. But I think it's got to find that floor first, because no one knows where that floor is right now.
All right, well, lastly, 2016 is an election year. What's your outlook? How does the potential race there shake up the economy and the markets?
Look, I think the one thing we can say about the U.S. presidential race vis-a-vis the economy is that it's an unstable race. And again, this is what I was saying earlier. I think that the fundamentals of the American economy are still unstable, just as the race is.
Well, thank you both very much for being with us. We'd love to have you back on the program here. That concludes our coverage today. Do stay tuned here every day for all your global economic coverage and analysis. I'm Natalie Ehrlich from the Jaffa Port in Tel Aviv. Thank you very much for watching.